Sangeeta Purushottam now joins us. Sangeeta, good morning. Thank you for joining us. We're off to a great start for 2013. Nifty has appreciated by about 100 points plus. Do you think this is as good as it gets, or this rally has now gained some serious proportion and it has some more steam left?
I think the rally does have some more steam left. When we look at levels of 6,000, it's really more psychological. I think a more important indicator to look at really is the valuations of the market in the context of the news flow that we're seeing coming through. And currently we're trading roughly at close to our long-term averages, which means that, if the environment remains benign and we continue to see both flows as well as news flow coming through, we could easily go up another 10 to 12% before you start to get a little concerned about overall valuations and, worry about whether the news flow and the momentum would continue. So I think so far it looks good. It's at slightly higher levels that one would want to be a little more circumspect.
Sangeeta, hi, morning. What did you make of the trends from the December auto sales this time around, wherein there has been some disappointment when it comes to Tata Motors and M&M?
Yeah, I think, on the ground, what we're looking at is a fairly slow recovery. And it's not, and even the rally that we've seen overall, in the market as well as the news flow in the economy really points to recovery ahead rather than recovery now. So we need to remember that, this data that we're looking at is in some ways historical data, and what's going to be important is the trend going forward. And domestically, at least, I think over the course of next 12 months, we should see auto numbers looking up, particularly if interest rates start coming off. So I think that remains an important trigger for the auto sector. The numbers, do have a reaction on stock prices. The auto sector has always been like that. So that's what we're really seeing getting reflected in, how the stocks are performing. But I think the more important thing really lies ahead.
Sangeeta, about a week ago, we got a comment from Maruti. And Maruti has gone on record and they've indicated that for this calendar year, which is 2013, they will be struggling. It will be very difficult for them to maintain the double-digit growth. But if I map the stock performance, ever since that profit warning came out, the stock has appreciated by about 100 rupees.
Well, I think, it's really a question of what, are you able to sort of look beyond the valley and see what lies ahead? So I think the markets clearly believe that, 2013, whatever be the real performance, is going to be some kind of a bottom and, better things lie ahead given the expectations that there should be significant interest rate cuts this year. And I think that is part of what is driving it. The second thing is that if you look at Maruti's margins, they've been consistently coming off over the last few years, and they also seem to have bottomed out. There's margin improvement which happens either because of currency movements which are favorable for it, or cost cutting that itself can have a huge leverage on the stock prices. So I think there are some other factors there which are at play, which are also something that the investment community is looking at.
Do you think there is a tactical trade in PSU banks? Bond yields have come down. There is a strong indication that Reserve Bank of India will cut rates in the next monetary policy. Do you think currently the environment is rather conducive for banks?
Yeah, I think so. I think that, PSU banks do merit a look. It's not only the bond yields. I think there is some expectation that, if the whole economic story pans out and we are looking at a recovery, then, asset quality, which has been one of the largest concerns dogging the PSU banks, could improve. So that's another potential kicker. And most importantly, when you look at the valuations of the PSU banks, they're trading at multi-year lows in terms of, price to book. The argument always has been that we don't know what the book exactly is given the asset quality concerns. But, as these concerns mitigate, the confidence levels in the book would come up, and you'll see a potential re-rating. So it does look like a tactical call now. It could actually end up being a fairly strong call in terms of a subsector which will outperform if the economy does pan out the way most people are expecting it to right now.
Sangeeta, I just want to draw your attention to the earnings now, and come next week we would be looking at Infosys' earnings. Does it seem like it's an inevitable thing that Infi may perhaps cut its guidance this time?
I think it's likely. And in the ID sector, I think there are two things which could happen. The first half of the year may not look so great, and I think if towards the second half, maybe the outlook for calendar 14 could start improving. If we do see a pickup in the US economy, and you start seeing some traction coming back into IT spend. So for the moment, I would continue to be circumspect about volume growth. It will remain iffy, not just for Infosys, but I think also for the larger pack.
Sangeeta, at a time when global growth concerns are still visible, do you think large cap IT stocks as a basket they will underperform?
They could underperform for a while, and they have underperformed through all of last year. So I think that underperformance could continue. One needs to watch out, for any signs of improvement, which I think may happen towards the second half of the year, if at all. But first half, I would avoid them.
Sangeeta, at a time when earnings have yet to bottomed out, Indian markets are clearly dependent on liquidity. But to your mind, for next 3 months, do you think liquidity could get challenged because of government paper and the fact that most of the promoters now have decided to opt for the OFS route in order to reduce their holding in the company in order to comply with the new listing norms?
Yeah, I think as we go along, and particularly if we see the market move up another 8-10%, you will see a flood of paper. There's going to be PSU paper, there will be private sector paper. So I think at some level, yes, it is going to be a concern, and it will start, new offerings or offers for sale will start absorbing part of the liquidity. So that's the natural path that, a rally takes, and therefore that is something which could, slow down the gains in the market.
Bharti Infratel, Sangeeta, do you track that one?
No, not really, not very closely.
What about the care ratings?
No, I mean, I've looked at the IPOs, but not too deeply.
So I would imagine you don't track PCJ also?
No.
What's your big idea for 2013 then?
I think one has to look a little beyond what has actually performed. So I think PSU banks, which we discussed earlier, could be a potential performer. Select infra companies could, do well, particularly if the rate cycle comes down. So I think I'd really focus on the rate sensitives for 2013.
Sangeeta, the finance minister is soon going to start talking to industry representatives on pre-budget expectations. What do you think we can expect from the budget this time around, or would it be totally of a populist nature?
Need not be, because we're still a few months away, or more than a year away really from elections. And I think this is in many ways the last opportunity to set the house right from a fiscal point of view. And there is a breather in terms of, some time to pass before the election rhetoric starts to pick up. So it's possible that the budget may end up, being a positive surprise for the market in terms of how it goes about the fiscal consolidation. And I think the more important thing also is that in some ways we have our back to the wall. A lot of the momentum that we've seen on policy reform has also been driven partly by the fact that we were staring at a possible rating downgrade, and those fears haven't gone away. So I think at this stage it would be better to bet that the budget could surprise you positively.
Sangeeta, what is your sense? I mean, we've chatted about Infosys and as to how the street is somewhere pricing in a guidance cut from Infy come Jan 11th. But is there something that you like from the IT space, any mid-cap stock or frontliners?
Well, I think just to carry on the commentary between, HCL Tech and the others, I think one of the reasons why HCL Tech did well was that it obviously had faster earnings growth, but also there was a huge valuation gap which had existed between HCL Tech and many of the frontliners. And I think a lot of that has narrowed. So from here on, HCL needs to maintain its earnings momentum just to, keep its PE going. So even HCL Tech may not give you the kind of returns that you've seen over last year. And I tend to agree, that the entire sector is looking iffy. There are better opportunities in the market, and therefore it makes sense to look at them. And I think that's something which is also going to drive the relative underperformance of this sector, because if the economy picks up and as we're expecting, then you'll just have a lot more options in the market to give you those returns with a lot less headaches.